If you think that watching a lot of trading related videos can improve your trading career, you are completely wrong. I understand you want to sharpen your edge, you want to be the best, and probably make a lot of money. But more you study, more you end up ruining yourself and probably end up losing a lot of money. Trust me, I did the same exact mistakes. And in this video, I'm going to help you to understand what you should be doing instead if you truly want to see success in your trading. Believe me, I wish I had someone telling me what I'm going to show you now, like for real. So if you stick till the end, I promise you, you will have a step-by-step guide for everything you need to do to don't get lost anymore with your trading journey. Well, guys, so let's start understanding the true nature of the market, okay? How does the market move? The market goes up and it goes down, right? So that means that we have sellers and we have buyers in the market. So what is that common thing that sellers and buyers have between them? So when someone is selling, so let's say that you are on the selling side. So you are now selling. Someone on the other side of the world as a buyer is definitely losing money. And vice versa. So if someone is buying over here and you are selling it, if the bias is playing out, most likely you're losing money because you sold the market based on what exactly? Well, I guess based on specific patterns. And that's the thing that is common between the sellers and the buyer. So you have a very specific pattern. Let me type this out. Okay. So you have a very specific patterns that you use in order for you to take a specific setup. So the question is, where exactly do you get the pattern from, right? So when you start trading, definitely you start watching a lot of YouTube videos. You start watching a lot of, let's say, courses. You do a lot of mentorships, and so far so good. It's beautiful. Why? Because when you join a mentorship or you join, let's say you watch a video on YouTube, like literally say the first person that you're watching. So let's say that you have one person that is called person A. All right. So let's put it like this over here. So you have person A. Let me write over here. And then you have this person A that is showing you how to take a trade, how to trade based on two key principles. One is definitely, as we mentioned before, is the pattern. And the second one most likely is going to be around the time frame, right? Because everybody uses different time frame in order for you to trade and take a trade. And this person is definitely going to show you some particular things that you can use in order for you to take a specific setup every time that happens, whether it's a buy or whether it's a sell. Now, what happens is that as you progress, you start realizing that this pattern and this time frame are not the only way for you to trade, because you see a lot of people on all over social media trading differently, having different type of strategy. So you start getting curious, and then what you start doing is like you start deep diving into the second thing, which is literally chasing somebody else and trying to understand their strategy. So now you reach out to the person B, okay? So this person B that you just came across is showing you, guess what? The same exact thing. So he's sharing with you some specific pattern, right? Pattern. And again, I'm saying time frame because every pattern, every time frame is on a different stage. So he's showing to you a different pattern, a different time frame. So now what is going to happen is that at one point, if you are happy with him, that's fine. But then at one point, the fact that you had a background over here from this specific person, person A, is kind of start getting a bit confusing for you, because first thing first, you now have two different patterns. You now have two different time frame. And then eventually what happens is that the fact that you study this person is kind of affecting you to person B. So then on person B, you are somehow not happy anymore because you are not able to see the consistency that you're looking for. And trust me, what you do, you go to the person C. And I know because I did the same. It happened to me. I've seen so many of it. And I'm pretty sure that if you're watching this video in one way or another, you can relate to it. And again, the same person is showing you different patterns and is showing you different time frame. Now, this is not the problem. The biggest problem is that at any given time, at any point, when you have all this information, you can find yourself somewhere around this level. So let's say you are a seller, now you're trading and you're taking a sell trade, okay? And you can see that based on everything that you studied, based on everything that you've seen over here, you can see a specific pattern forming for you, telling you that this is a sell. But the problem is from the moment when the sell is starting playing out, here is where a lot of people start losing their mind, because when price reach eventually a very important level, let's say to the left, somewhere around here, okay, you start seeing things that are like from a buyer's perspective. Now you're like, oh wait, I remember I started from person B or person C that was telling me that this specific pattern over here, somewhere around here, and that this is a demand, let's say, is for a buy. So why did I take a sell for? Should I go for a buy? So what is this happening here is that the fact that you have spoken to 3 different persons with 3 different point of view and mostly 3 different time frame, now is putting you not in a seller side, not in a buyer side, but it's putting you and placing you somewhere around here in the middle, where literally you get lost because now you're trying to take a trade and you're so confused because you have so many information that you have no idea where to look for, if you should be buying or if you should be selling. And even if you sell because let's say this person and this person pattern is aligning, trust me, the fact that you started from person A is probably telling you that it's a buy. Or probably the fact that you're trying for a sell because you're following this person, but you had experiences prior from the person B and person A, probably is telling you that now is a buy. And this is exactly where a lot of traders get lost. And this is exactly the reason why a lot of traders and at one point start losing so much money. Maybe they were very consistent. Let's say when they started with the person A, they were very, very consistent, right? But then they wanted to improve more. And that's why I said at the beginning, they wanted to sharpen their edge. So what happened is that they jump for person B, and then they jump to person C, and so on. And that's what happened. And that's what happened when people start saying, oh, you're hopping from one strategy to another one, because you always keep jumping. You're never happy with what you're doing. So at one point, having all these informations, it brings you in a situation where you're stuck in the middle, and that's where you get lost literally forever. And trust me, getting out from this zone is extremely hard if you don't know what you're doing and what you should be doing. And that's exactly what I'll be telling you next, what you should be doing. But before you go to that, I want to give you some tangible example to make you understand what happened to me, literally to me myself, because I did this from A to B to C and whatsoever, where I literally faced this situation. I didn't know anymore what to do. And here I'll explain you why I prefer structure over liquidity. So let's jump quickly on the chart and I'll show you what I wanted to share with you guys now about the mistake that I made when I started doing exactly what I'm sharing with you right now. So a few years ago, when I was trading structure, when I learned how structure works, supply demand works, I started realizing a lot of people were shifting their strategy and their approach towards the liquidity concept. So what started happening is that at one point, okay, check this out. So at one point, I started learning that Asian high, Asian low are one of the most dangerous places where you can ever take a trade. So let's say, so here you can clearly see, let me mark this out properly. Here, the purple box, by the way, they are the, what's they call it, liquidity. Okay, so they are the liquidity zone. And what happened is that I learned from someone that you should never ever take a trade from an Asian high or Asian low, because the likelihood of you getting smoked, like getting destroyed, is extremely higher. So then what happened is that it was good, because I was like, yeah, why not? Let's do that. So now you're telling me that I have to just avoid Asian high, Asian low. But then what actually started happening, all right, and check this out, that's what I'm talking about, is that at one point, I started realizing that there was a big clash happening, because the most common factor, the most common pattern that I used to see was the following. So in this case, you guys see I've marked out all this purple box, and we're gonna go there in a bit, but let me show you what exactly I was looking at. So when price was making this, right? Usually before I did that course, I wouldn't even say a course, it's a long story anyway, just leave it. But then what I did is that when I learned that this high is this low, like literally the first thing I learned about the structure, I was like, okay, what I can do now is that I can wait for price to retrace over here and then go down, right? So far so good. So that was for me the person A, from what I learned in this case, that this is how it works. Then when I went to person B, what started happening, the fact that he said to me the Asian high, Asian low should never be traded because they are dangerous, then guess what? I had sometimes structure happening within Asian high and within Asian low. So now you guys can already understand what is gonna happen next. Yes, exactly. When I was about to take a trade, when price was reaching somewhere around this supply zone, I was about to pull the trigger because I'm like, okay, the person A that I had was telling me that if the structure is this, then I should be selling. Well, the person B was telling me that, oh boy, you have to stay away from Asian high. So this was the Asian high, right? And this was the Asian low. So what do I do now? And I started getting confused because sometimes I was taking the trade was playing out, and some other time when price was not playing out because it was taking me out, I was getting furious because I was like, oh damn, I knew that the Asian high is something that I need to avoid. But I still took the trade. So having already this problem only from person A and person B without going to person C, D, whatever, it already placed me in a very, very bad situation because I had so much information and I didn't know how to put the things together. I was scared, I was feared, I was like, oh my God, am I doing the right thing? So I started seeing so many wrong things. And I'm pretty sure you can relate at one stage in your trading journey. And if you haven't gone through yet about person A, B, C, D, and you're still in person A, well, lucky you if you're watching this video because this is gonna save you so much, okay? So now, why did I mark all these boxes over here? Because at one point, what I started doing is that I started thinking, okay, so that's the case, okay? What is the thing that is giving me, first thing first, more confidence, and secondly, more clarity, okay? So what I started doing, I was like, okay, the person A was the one that was giving me the most, let's say, objective way for me to understand what I should be doing, while the person B, yes, gave me some point of view, understanding, I paid a lot of money, whatever, for understanding the concept, but then again, it wasn't something that I was very comfortable with. So I started backtesting a lot, and again, that's where I'm going for the data collection. I started collecting a lot of data, a lot of backtesting, and this is extremely important because when you are confused and you don't know what to do with certain specific strategy, you have to go for this, which is the data. You need to collect as much data as possible in order for you to start scaling up and understanding which one you should be giving some priority. And as you can see over here, I guess this is literally, by the way, this is just random. Like this chart was the prime example. Okay, look at this. Here you can see that there is an Asian box happening. Then price breaks the structure over here, below over this zone, and then there was an entry for a sell all the way down here. And then what happened is that price goes up, breaks the structure to the downside. In this case, that would have been a stop because price would have taken out the Asian high and then it would have dropped down there. Then what happened is that very next day, you had high, low, high, low, high over here, and then price breaks to the downside. And as you can see, this time the Asian high is almost some equal over here, doesn't get taken out, and then price gives you a nice sell to the downside. The very next day over here, price gets taken out, and then again it gets taken out, and then what happens is that here breaks the structure, gives you retracement, and you have an entry, but then later it gets taken out. So you can see that both of the scenario from person A, from person B, were playing within the days. Sometimes person A pattern would play more, sometimes person B pattern would play more, and that's the true nature of the market. That's how it usually works. It's all about statistic and edge. So now you might be wondering why all of this is happening and why suddenly you have all these people giving you two different point of view, two different point of way of trading. The reality is that 10 years ago, let's say 10 years ago, majority of the traders, retail traders, there were only few people that had access on trading. So most of them, they're all trading the same thing. And during that period in time, the most common pattern that people used to trade were around support, resistance, and trend line. Most of them, they're trading these type of strategies, right? Then as time progressed, what happened is that people started noticing that this type of pattern weren't convenient anymore. So they started studying something further. They started developing something different because they weren't happy with this. But that's exactly where the problem arises, because a lot of traders were still trading support and resistance. So this, right? And some other traders that were waiting for the grab of liquidity, the liquidity grab, or whatever you want to call it, the fake out, or whatever. And then they were trading from this or from this. While other traders were trading from this and from this. And here, where things started splitting up day by day, and even up to date, this is what exactly is happening. That's why nowadays, especially now, if you're getting into trading or you're learning trading, is one of the probably hardest period for you to learn, because you're going to have everybody giving you so many different perspective and point of view. And you know what is the most beautiful thing is that at one point, you can understand also that they all goes along the same way. However, it's on you that you need to know how to distinguish the two different categories of trading, which is liquidity grab or which is the structure. And this is something that I will discuss every time on my channel. That's why I decided personally to go with the structure, because it was the most comfortable and convenient one for me to trade with. And I can promise you, no matter where you go, person A, B, C, D, at one point you're gonna see that things gonna start clashing bad time. Same exactly what happened to me over here, right? Structure or Asian high, Asian low. What do I do? Support resistance or wait liquidity grab? What do I do? You know, that's the kind of question that you're gonna start having, and that's the kind of thing they're gonna pull you down if you don't organize things accordingly. So now let's go to the hot part of the video, the sauce. How do you put things together in order for you to have something precise that you can follow without getting lost and understanding moving forward? After watching this video, you will know what you should be doing exactly, okay? So let's go back to where was our drawing. Let's see if I still got the drawing somewhere. Okay, so the drawing was here. Let's go to, what's it, 4 hour, whatever. Yeah, okay, let's go over here. Do a little bit of cleaning. Okay, so let me clean up a little bit over here. All right, beautiful. Now, what we're gonna be doing is that I'm gonna be giving you guys a very solid step-by-step guide that I personally use for myself in order for me to know, okay, what exactly I should be looking for every single time, whether I'm a buyer or whether I'm a seller. It doesn't matter. It doesn't matter. All it matters is that I personally have a specific narrative that allows me or helps me to understand what is the right things to do. So, okay, what are these things? So, first thing is that you need to know how to understand the bias of the market. So this is literally the first thing, bias of the market. Now, there is nothing wrong. This is something that I want to edit now, literally, is that there is nothing wrong on going from person A, person B, person C. And the reason for it is because if three of them, they have different type of trading style, different type of pattern, it's okay for you to see them all, because at one point you can see which one is the one that you find closest to you, the one that gives you more clarity. So that's why I was saying that if you are someone that you went through all of these 1, 2, 3 patterns, then you need to know what exactly are the right information that you need to extract. So the right information that you need to extract are the one that I'm giving it to you right now. So the first thing is understanding the bias of the market. And this is probably the most crucial one, because if you don't understand where the market is headed to or where is it going, right? How are you supposed to trade? How are you supposed to take the trade? So when I say understanding the bias of the market, that means that if you have started from person A, if you have started from person B and C, you need to see which one of these 3 people, right, are giving you the most clarity in order for you to understand, right, where the market is going and how to know where the market is headed to. So this is point number 1. So you literally take out this information from one of these 3 and see which one is gives you more clarity. Then we go to the second one. The second point is literally understanding your point of interest, right? Point of interest from where you need to take your trade. So from where to take your trade. And yes, exactly, you can already imagine, you can guess that this is the same thing that you should be doing, right? Again, similar to this one, which means from point A, B, C, you need to know which one gives you more clarity, most objective way for you to understand what type of point of interest you should be using after you understand the bias of the market. So now that you want to take the trade, whether you are a seller or buyer, you need to know what type of point of interest you should be using. And that's the one that you add then on your plan. So this is, again, point number 2. Then we move to point number 3. So what is the point number 3? Point number 3 is probably third point, is probably the most important one, which is understanding, again, where to put your stop loss and how. Because if you just randomly put your stop loss and you don't know why you've placed your stop loss over there, trust me, you're gonna have a hard time to grow, develop, and especially having some great performance and result on your trading journey, right? Why? Because in this case, if you don't know where to put your stop loss, every time you're taking a trade, if you get taken out from the market, you will have a lot of emotions. They're gonna start messing up with your brain and your psychology, and you're gonna start making a lot of mistakes. And again, this is something that should be going along with your point of interest. So these 2 points over here, the point of interest, the second and the third point, they should be blended together. So try your best to understand from these 3 people or 4 people, how many people you went through on how to combine the 2 to put them together. And then lastly, the last one, which is again one of the most important one, this is your exit criteria and your TP, right? Where exactly you should be getting out of the market when you're taking the trade. This is one of the most crucial things that a lot of traders literally underestimate a lot because they're like, oh, I'm taking the trade, I'm the best, I'm this, I'm that. But then when they're in the trade, they have no clue on where to go, okay? And where they should be getting out or how even to take profit logically. And this one is the fourth point that you need to extract in somehow based on the understanding you have, based on the concept you learn, based on the logic you have from all these different people. Once you start doing this exercise one by one from all of them, and you start understanding the orders, the key orders, which is understanding the bias, understanding from where to take your trade, understanding where to place your stop loss, and then understanding where to exit out of the market, I can promise you and guarantee you that no matter how many type of people you approach in order for you to learn a strategy, you will be 100% good and fully capable of pulling things together in order for you to have a specific solid trading strategy. And trust me, what I'm giving to you in this last 10-15 minutes worth of video, it took me years of pain, experiences and everything in order for me to understand like literally how these things works. Now, there is one important tips bonus that I want to give it to you guys is that the reason why it is so crucial for you to pull everything out from different people is because there is one common factor that aligns all of them over here. Can you guess what is it? I'm going to give you a few seconds to think about it, but I can tell you that if you don't do that, you will fail 100%. And the things that I wanted to say that is literally common factor between this point over here is literally your psychology. Okay? Psychology. What do I mean by psychology? Okay, one second. Okay. What do I mean by psychology is that if you are not happy with what you are doing, that means that if you are not happy the way you see your bias of the market, the way you see your point of interest or your TP stop loss, you will have a hard time to embrace your own concept within your trading journey. Why? Because if you do something that you are not comfortable with, that automatically itself is going to trigger what? Can you guess what it's going to trigger? It's definitely going to trigger the second most important thing, which is literally the emotions. So what you should be aiming when you're trying to pull all this information out over here is that whatever is the approach you're using over here, they somehow satisfy your psychology, that you are fully comfortable and you're happy with it. Because if you are not, as I said, the consequence is going to be over your emotions. And then when you have a problem with your emotions, what do you guys think is going to happen? Well, you're going to start taking so many losses. You're going to start making so many mistakes. And then if you guys want to know more about the different type of losses you can take based on emotions, make sure that you watch this video over here where I break you down how important it is to understand the different type of losses in order for you to tackle emotions. I'll see you to the next one, guys.